Hello and welcome everyone to the Week Ahead Commodity Report, where we of course will be reviewing the markets for the week ahead. As we enter into the final month of the first quarter, rapidly surging global inflation and the unstoppable commodity supercycle, they are beginning to emerge as two of the biggest and most exciting trading opportunities of 2022. Traders are pumping more money into commodities than at any other time in the last decade. This is enticed by red-hot inflation and a sector-wide supercycle offering incredible opportunities to generate huge profits fast. Tight supplies of everything from the metals to the energies to agriculture, that has sent prices skyrocketing to multi-year highs whilst also pushing markets into backwardation. This occurs when demand outstrips supply and as a result accelerates prices sharply to the upside. So far this quarter, cash has flooded into commodities at a record-setting pace as traders scramble to capitalize on the lucrative opportunities presented by the supercycle and seek to hedge against the fastest rise in inflation seen in 4 decades. According to Citigroup, capital flows into commodities from retail and institutional traders this quarter that has totaled over $700 billion, the biggest net inflows on record since 2007. Citigroup estimates that figure could easily double by the end of the second quarter of this year. Commodities have also been further boosted this month by Russia-Ukraine conflict, which has fueled fresh concerns over supply disruptions on top of the existing global supply chain crisis. Russia is the world's top producer of commodities including aluminium, copper, nickel, lithium, palladium, platinum, iron, tin, zinc and uranium, as well as major heavyweights in oil, natural gas, wheat, corn and many other agricultural products. Western sanctions on Russia basically indicate that the global supply chain crisis that is about to get worse and potentially drag on for longer than expected. This will ultimately keep inflationary pressures elevated for many years to come, positioning commodities as one of the most lucrative and must-have asset classes in every portfolio. So far this year, a long list of commodities they've already blasted through multi-year highs, which includes aluminium, copper, coffee, cotton, nickel, palladium, lithium, uranium, natural gas, just to name a few. Meanwhile, oil prices, they have surged above $100 a barrel for the first time since 2014 and have more than doubled from this time last year. In total, 27 commodities ranging from the metals to the energies to soft commodities, they have tallied up double-digit gains already within the first 2 months of 2022. And this is just the beginning. According to Goldman Sachs, they have never seen the commodity markets this bullish before. As retail and institutional interest continues to grow, this will keep driving prices higher, especially considering that the fundamental backdrop for the entire commodity complex that remains extremely bullish as we transition through a new super cycle. Whichever way you look at it, the case for commodities in a well-diversified portfolio has never been more obvious than it is right now. Looking ahead into next week, the biggest macro events that traders will be watching closely for clues on the market's next big move, that includes the all-important non-farm payroll report for February, as well as Fed Chair Jerome Powell's 2-day testimony before Congress. Traders will be scrutinizing Jerome Powell's every word for clues on how the Russia-Ukraine conflict could impact monetary policy, or even if growing geopolitical risk may potentially force the Fed to change their rate hike plans this year. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we head into a new week. Firstly, with gold, as we discussed with you last week, our main job on the metals and the energies last week was to bank into strength and take more profit off the table. So over the last 2 weeks, we have now banked with our clients at the Gold and Silver Club over 15,000 points of profit on commodities, everything from the metals to the energies, as they've had parabolic moves in the last week. That has been our main job, to bank further profits. As you know, our positions on gold, they were in sub $1,800 per ounce. We've seen an immense move to the upside over the last couple of weeks. The move has also been supercharged by inflation running at 4 decades high and also geopolitical tensions at the moment between Russia and Ukraine. And of course, this has also further prompted safe haven inflows into the metals last week. But as we discussed with you on both gold and silver asset of the day, these are not the times to be buying the metals, not getting late into the move, especially as you're going to see profit taking. And once the news does actually get priced into the markets, this is likely to then see outflows and profit taking. Markets hate uncertainty, but once they start to get a clue as to what is going on, this is where you see a relief rally. We saw risk on with equities on Thursday and Friday, and subsequently big profit taking on the metals here. So no surprises there at all. The volatility on gold there on Thursday, we saw over a 950 point pullback to the downside, but we capitalized on this move, banking windfall amount of profits across the metals and also the energies last week as well. If you look at platinum price action here, also broke out to the highest levels in over 6 months. We saw gold prices break out to the highest levels in over a year. Also silver prices, they broke out to the highest levels in 9 months, and we also saw palladium prices, they broke out towards 9-month highs as well. So with that, it's been a fantastic time to really capitalize on these breakouts. And also, of course, with energies last week, they broke out to 8-year highs, and we benefited from that massively. In fact, after banking a windfall amount of profit last week on energies, over 9,000 points banked, we then were gifted with another opportunity once crude oil dropped $10 per barrel all the way back down to $90 per barrel. That trade is already up almost 200 points within a few hours after us getting into that trade on Friday. I would see the potential, if we continue to hold around 89 to 90 US dollars per barrel, for a swing back towards 95, possibly even $100 per barrel as we go throughout the month of March. That's what we're looking to capitalize on at the moment. Of course, if we were to close below 89 US dollars per barrel, that would be invalidated, and then we would likely see a move back towards the swing lows that we saw tested in the month of January. Then moving over to gold here, typically this time of year, especially as you go into the very end of the month, so Monday being the very last trading day of February, you would expect further profit taking and potential for a pullback to the downside as we go into next week in the lead up to Friday's non-farm payroll data. Again, these are not optimal levels to be buying in. Our positions on gold, they are sub 1,800 US dollars per ounce. You can make money, of course, coming in and out quickly of the current volatility, but most traders out there, they get their delayed confirmations in the market, they get FOMO, they end up buying at the top and end up getting chopped up and liquidated. So we may actually see another great opportunity to add further exposure to gold as we progress into non-farm payrolls and then move into the FOMC statement into the middle of March here as well. Those will be key news items, often provide a lot of volatility for the metals and opportunities to then capitalize on those moves. And then moving over to silver here as well. As we discussed with you on silver asset of the day, no surprise at all to see silver getting well supported alongside gold, getting that safe haven bid. But again, the real trick to this was banking on strength before you had profit taking later on in the week. As we talked you through, that was our expectation. Later on in the week, you would see profit taking in the markets, particularly as we go into next week. We had contract settlement, and also next week on Monday, it will be the last trading day of February, and therefore you could get further outflows. Once you're past all of that, that provides the opportunity for some consolidation of the gains here on silver, and then more opportunities going into non-farm payroll and the FOMC statement in March as well. Then moving over to platinum. Platinum also gave us the opportunity to bank just under 5,000 points the previous week. That was a windfall amount of profit over 4 trades. We came all the way up, breaking out towards the 9-month highs there on platinum. Platinum last week had a 6% breakout to the upside. We've subsequently seen a sell-off that we were anticipating at the end of the week there. So we banked profits before we got this large correction to the downside. So again, going into next week, I would absolutely have the energies, of course, on the radar. So crude oil, which is currently trading just under 92 US dollars per barrel. Gold, of course, it's trading at 1,888 US dollars per ounce. This can provide some really great opportunities if you're patient on this market as we progress towards non-farm payroll next week as well. Obviously, we also have Jerome Powell speaking next week. Then we're moving into the FOMC statement in March, which again, that whole week tends to be a great opportunity to build out further positions on the metals. Extraordinary times, they do create extraordinary opportunities, and right now we are living in one of the most exciting and rewarding periods ever in history. Whatever long-term goal you're looking to achieve through trading, whether that's to create a full-time income, a second or replacement income, or just to earn a better return on your savings, then now is the time to take action to really give yourself the gift of a better 2022. Right now you have the opportunity to make 2022 your best year yet, which based on our research we predict is going to be a record-setting year due to all the macroeconomic events that are currently unfolding. If you want to maximize your money-making potential and thrive, not just survive in these fast-moving markets, you need to adapt your strategy to the current market conditions and most importantly, utilize a professional research-driven approach. In these times of heightened volatility and rapidly surging inflation, the importance of having an essential income generating skill like trading, it has become a must-have necessity. If the pandemic has taught us anything, it's that you should never rely on just one income stream. Building multiple streams of income, it's no longer an option, it is a priority to make sure that you're inflation proof and that you can thrive in this highly lucrative climate, not just survive. If you want to gain the ultimate edge to really supercharge your wealth in these fast moving markets and highly profitable times, then you need to make sure that you're trading like the hedge funds, the money managers, the institutions, utilizing a professional, research-driven approach. Having access to the right data at the right time, it is the single greatest difference between ordinary and extraordinary results. The greater your data and intelligence, the greater your edge in navigating these fast-moving markets with precision, accuracy, and the highest levels of profitability. Trading like every other misguided retail trader out there, using outdated technical analysis and gimmicky technical indicators will not work. You're guaranteed to get crushed and chopped up in these markets. This is where you need to be utilizing a research-driven approach to the market, utilizing data, statistics, market intelligence, utilizing the intermarket correlations, the ratios in the market, alongside that the capital flows, key areas of liquidity, understanding the fundamentals, the macroeconomics, the geopolitics, and of course learning the daily, the weekly, the monthly, and quarterly cycles for each commodity, and then understanding how the hedge funds, money managers, banks, and institutions are positioned in real time. That will help you massively to get an edge in the market. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars, you get access to real-time trade ideas, access to our institutional research and market intelligence, access to our private members academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.